And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick here with Katie Greifeld, taking you through to that closing bell. It's a global simulcast. Carol Massar, Tim Stenovec, they join us now. Welcome to our audiences across all of our Bloomberg platforms, television, radio, our partnership with YouTube. Here on a day where we normally focus on the S&P, Carol, but I'm going to focus in on the NASDAQ 100, the biggest gap down at the open in about 4 weeks. And that was all based on a Wall Street Journal story that said maybe OpenAI ain't selling enough, as some people had thought.
Yeah, and OpenAI said, basically, in a nutshell, these weren't their words, but, don't worry about it. We're doing okay. But I will say you are seeing it play out in some different names, whether it's CoreWeave and a few others. But this has been that big question, right? Before we were so focused on the war, understandably, this concern about the AI spend, the return on investment. We're going to get some big reads on that tomorrow after the closing bell.
Yeah, our reporting indicates that the company's CFO, Sarah Fryer, has told leaders internally that she's worried that the firm might not be able to pay for future computing contracts if revenue doesn't grow fast enough. We should note, Carol mentioned CoreWeave and the like. Oracle shares took a hit as well. SoftBank ADRs took a hit today as well. So sort of like anywhere there's exposure to this trade kind of got beat up today.
But isn't this the issue, though, guys? I mean, because the whole thing is every time we make these announcements about this investment here and this investment there, it's not actually money spent. It's a commitment to maybe do something in the future.
Yeah, well, I mean, to CoreWeave's point, Tim, you mentioned one of the companies here. They did say that OpenAI is a terrific partner, but not the only one. I thought that was pretty interesting. Terrific, but we have a diverse and expanding set of customers.
All right, we are off the lows of the session, but definitely solidly in the red for all of the major indices here in the United States. I just do want to point out, we don't have it on the screen, but the Philadelphia Semiconductor Index, which had been on a tear, dropping 4% on the day. You see that reflected in the drag in the NASDAQ composite, which is going to finish the day lower by about 0.9%. The S&P lower by about 0.5%. The Dow Jones Industrial Average only down a smidge, about 31 points or less than 0.1%. And the Russell 2000 selling off by about 32 points or 1.2%.
All right, what does it mean for the S&P 500 in terms of the mix, guys? 232 names, Katie, to the upside, 270 lower in the trade, and you had one unchanged.
All right, meanwhile, you take a look at the sector level as well. And it was interesting. Even though it was a down day on the S&P 500, you did have more gainers than losers. 6 sectors in the green, 5 in the red. Your big winner today was energy. That sector higher by about 1.7%. Real estate also having a pretty good Tuesday. So too did consumer staples. But then you take a look at the downside. Information technology down 1.3% as a sector. That was your biggest loser when it comes to points and a percentage. Materials, industrials also bringing up the rear.
We are expecting quite a few earnings after the bell, including from Starbucks, Enphase, and a few others. Booking, the travel agency, out with theirs. And they said that in the first quarter, gross bookings came in at about $53.8 billion. That's a little bit light. The street was looking for 54.2. Overall revenue did rise about 16% in the quarter, in line with estimates. Agency revenue, that was down by about 2.3%. And we talk about the bottom line here. Adjusted EBITDA, a rise of about 19%, a slight beat here. But you did see a little bit of touch of margin pressure there on the bottom line here. So, again, a big focus right now on the travel sector, particularly in light of that increase that we've seen in jet fuel prices and inflation.
And you can see the stock getting hammered after hours right now, down about 8%. And this was a company that had sold off into this report. Year to date, shares down about 19% on a total return basis, Tim. So we'll see, of course, if these losses hold, but more bad news for Booking.
Yeah, I'm looking in their outlook and sort of commentary for guidance for the second quarter and for the full year. The company says that they're assuming the direct and indirect impact from the conflict in the Middle East continues through the end of June. Specifically, their outlook accounts for continued fluctuations in travel demand across Middle Eastern inbound, outbound, and intra-region routes, as well as ongoing disruptions to major transit corridors. They're looking for a recovery in bookings by the second half of the year. The company, though, says they're mindful that a sustained disruption could introduce broader inflationary pressures, including fluctuations in jet fuel prices, airline capacity reductions, as well as weigh on traveler sentiment more broadly. And those dynamics can create headwinds. The stock facing headwinds after hours down 8.3%.
All right, guys, I want to go to T-Mobile, bouncing around here in the aftermarket. The company adding 217,000 new monthly accounts. That's a 6% year-over-year increase compared with analyst estimates for about 192,000 or just shy of 193. So that's a big beat. Company no longer reporting changes in wireless customer additions. Instead, it's focusing on tracking relationships that can include multiple customers' phone lines, connected devices, and home internet service. The company, T-Mobile, you can see bouncing around just a little bit lower as we speak, bumping up its full-year guidance for several metrics, including full-year net account additions, and now expects new monthly account additions in the range of 950,000 to 1.05 million. So again, beating Wall Street expectations for the number of new customer accounts it added in the first quarter. New CEO, remember, at this company, looking to put his stamp on the company. Right now, stock down about 0.4%.
I do want to go back to Booking, and those shares that remain under pressure. And a lot of this, of course, has to do with some of the concerns about travel trends, not only, of course, because of the cost of jet fuel on the planes, but overall the drop in consumer sentiment and whether that weighs on some of the plans there. We should point out Brent crude prices, oil prices overall, at least in the future markets, have been elevated for 7 straight days. It's always a reminder here that despite some of the look through that a lot of investors have had with regards to the situation in the Middle East, that situation, of course, still far from resolved. The Strait of Hormuz still choked.
Yeah, Booking, for their point, saying that impacts from the conflict to continue through the end of June there. So interesting to see that sort of timeline on it. I will say, when you take a look at T-Mobile, it's interesting to see this new metric that they're promoting, shifting from reporting changes in wireless customer additions, instead focusing on tracking relationships that can include multiple customers' phone lines, connected devices, and home internet service there. Again, now you can see our T-Mobile shares actually popping into the green, Tim, though it's been a sort of jerky trade.
My first instinct when I hear that, Katie, is that, investors and analysts don't love getting less information. And I wonder how they're going to track that compared to like a Verizon or AT&T, which already reported for the quarter, and how that compares. But the company says it sees fiscal year postpaid net account adds 950,000 to 1.05 million. The estimate was for 973,000. T-Mobile shares bouncing around, but now down about 1/10%.
All right, speaking of stocks being down, let's go to Robinhood, down about 3% here in the aftermarket. Just a few headlines. First quarter net revenue, that's coming in a little light, 1.07 billion. Street estimate was for 1.14 billion. First quarter adjusted EBITDA, that too is coming below the street estimate, coming in at $534 million. Street estimate was for 583.8 million. First quarter transaction-based revenue, obviously closely watched, that too is light, $623 million. Street estimate was for 661.3 million, and the company not providing a 2026 outlook for operating expenses. And you guys can see that stock down about 3.5% here in the aftermarket.
Starbucks shares up about 5% in the after-hours trade, a beat and a raised quarter. We came in today with most investors hoping that Starbucks would actually raise its full-year guidance, and it actually did, boosting its full-year comp sales growth as well as the adjusted EPS outlook, and that's a big part of the reason why you're seeing the move in the shares. As for the quarter that just passed, the fiscal second quarter comp sales, they came in at 6.2% plus. The estimate was for 3.65, so a big beat there. U.S. comp sales 7.1%. The street was looking for 3.7%. But there is still some softness here with this company, and that involves international sales. They missed estimates, up about 2.6%. The street was looking for 3% even, and China comp sales up 0.5%. The street was looking for 3.4. So basically right now, this is a story about the U.S. and North America for the most part, but still some concerns there about what's happening overseas.
Meanwhile, let's also talk about Mondelez, those results crossing the wire as well. When it comes to the look back, first quarter adjusted EPS did beat estimates, coming in at 67 cents. The estimate had been for 61 cents there. And then you take a look at the look ahead, reaffirming some of their guidance here. Mondelez still sees full year adjusted EPS unchanged to growth of about 5%. They also still see full year organic net revenue also unchanged to 2%. The estimate had been for a growth of 0.91% here. So maintaining some of those forecasts. You can see shares rising a little bit after hours, higher by about 1.7% or so.
Shares of Visa also rising just a little bit after hours, up about 1%. Second quarter adjusted earnings per share for Visa coming in above estimates at $3.31. Second quarter net revenue beat there at $11.23 billion. Second quarter adjusted EPS, as I mentioned, beating there. And second quarter total Visa processed transactions coming in just shy of estimates at $66.1 billion. A headline, though, the company saying that consumer spending remained resilient, which I think is an interesting comment, given that they have such a good view of what consumers are doing at any given moment when they swipe their cards. Shares of Visa up right now by just about half a percentage point.
All right, and just real quickly, you've got Robinhood down about 6.5%, Booking down about 6.5%, and then you've also got Caesars, which also came out, and it's a little bit lower in the aftermarket, down about 0.3%. All right, guys, a lot of earnings, and of course tomorrow after the close will be the Big Mag 7 for them actually reporting, so we'll be breaking that down.